Of course, the most obvious answer to the question I posed in the headline of this video is because Applovin stock is up over 700% year to date. That's why everyone is talking about Applovin stock. But there's more to it than that, right? There's reasons why the stock price is increasing by that much. And those reasons are what have investors excited. And those reasons are why investors are buying Applovin stock for those prospects they expect in the future. So I wanted to dig deeper into the latest developments at Applovin and understand why so many investors are now interested in Applovin stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So as I highlighted in the beginning of the video, you can see Applovin stock price year-to-date performance. Look at that chart. It's a thing of beauty, isn't it? Going up and up and up. And then in late October, jumping even higher just when you thought the stock price could not increase anymore, right? It was up by over 300% in late October. So maybe many investors were thinking, all right, that's enough. It's not going to go up anymore. It's time to sell. It's time to take profits. But the stock more than doubled since that point when it was already up 300% year to date. That's why I think it's so important to look at the fundamentals of the business to understand if these stock price increases are just hype or is it based on profit and cash flow. And what I've been saying about Applovin is that the stock price is justified. The stock price increase has been justified because the company's underlying fundamentals have been improving. And I've had Applovin stock rated as a buy all year long. I just reiterated that recommendation today. I updated it and I rated it as a buy still, even after it's up over 700%. It's because what you're getting in return has also improved, right? All of us would not mind paying a higher price for something if we're getting more in return. And that's precisely what's happening with Applovin. You're paying a higher price for the stock, but you're getting so much more in return. So one of the positives for Applovin investors is that the company generates so much in cash flow that it can return that cash flow to investors because it has more than enough cash to reinvest in the business. So this quarter, they retired or bought back a total of 5 million shares at a price of about $437 million. And the management team raised their repurchase authorization by another $2 billion, bringing their total authorization to $2.3 billion. So they're going to spend over $2 billion buying back their shares. And management said, hey, we think our shares are undervalued. And they're spending money to back up that statement, right? You hear a lot of CEOs go out and talk about how they feel their shares are undervalued. I've heard some CEOs even talk about how their company's going to be the most valuable company in the world by far, and that it can be a several trillion-dollar company in the next few years. But that same CEO is going out and has gone out and sold billions of dollars of shares of stock, all while telling investors he believes the shares are undervalued, right? So as an investor, you've got to look at management's activity and their actions, not just what they say, to determine if they really feel their shares are undervalued. And if you're spending this much money to buy back your shares, and then you say it's undervalued, that sounds more convincing than if you're just going out telling me that you think it's undervalued, but at the same time, you're selling as much as you can of your own shares while trying to convince me to buy those shares. That's not as convincing. So I mentioned the company's performance has improved, and in the fourth quarter, they anticipate to deliver $1.25 billion in revenue with adjusted EBITDA between $740 and $760 million. That's a great adjusted EBITDA margin of 60%, right? If you take this at the midpoint, 750 million, and you divide that by 1.25 billion, that's a great profit margin, right? That means a lot of your money is coming down to the bottom line. Now, adjusted EBITDA is a highly adjusted number, right? EBITDA is already an adjusted number. And then when you're adjusting an adjustment, now you're adjusting twice, right? So EBITDA stands for earnings before interest, taxes, depreciation, and amortization. And it is a proxy for cash flow. And then adjustments to that mean you're probably adding back stock-based compensation to that mix as well. And so you're removing all of those non-cash expenses, which now you're talking about more closely cash flow from operations. And that's still a good metric for Applovin. So one of the more exciting things about Applovin is that it's entering into a much bigger category with its product. So the management team saying that it's the best product they've ever seen. It's the fastest growing, but it's still in pilot mode. So compared to the scale of our business inside gaming, it's too early for e-commerce to make a financial impact. So far, our results have been entirely on the gaming side. But right now, it just launched this new product they're talking about that the CEO was saying is the best product he's ever seen from them. And the results so far are better than expected. And the e-commerce market is much larger than the gaming market. And so that's what investors are so excited about. Not only has this company delivered excellent performance while operating primarily in the gaming market, it's now entering the e-commerce market, which is much larger. And management is saying that this product is the best product they've ever had. So the anticipation of growth is what's driving a lot of the enthusiasm for Applovin, in addition to the already improving revenue, profit, and cash flow numbers. So it's significant improvement in all of those metrics. Plus, looking ahead, that they expect that to continue. Another thing they're doing is investing in their cloud deployment so that they have the capacity to deliver. They say they've got one of the largest GPU deployments in the world at this point, and they like to invest ahead of their needs so that they can have the scale to be ready for the growth that they are expecting. So another good data point for those that are concerned about NVIDIA and NVIDIA's demand for its products. Here's another company, Applovin, that's utilizing GPUs and buying more, and their business is expected to improve. And these are the kinds of use cases that's driving demand for artificial intelligence. So investors that were concerned about that, here's yet another data point, and I've delivered so many data points across all of the categories of companies that I follow that support the growth in AI. So I'll end by talking a little bit more about the e-commerce side of the business, which so far e-commerce brands are saying that in their pilot, they're seeing as much scale and a strong return on ad spend as they're seeing anywhere in the world today on their user acquisition buys. And then on top of that, you're delivering an automated return on advertising spending. Man, that's great to hear. And that really drives the prospects for the business. If they are delivering top tier return on ad spending, they're going to attract a significant market share in that category. And remember, annually, people spend over or roughly $1 trillion worldwide on advertising. And so it's a massive market, and e-commerce as a percentage of that market is growing at a rate that's faster than the rate of the market overall. So that's what has investors really excited about Applovin stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.